Happy Friday, everyone. For those of you here in Korea and around the world, thanks so much for joining us on Business Daily. And I'm Lee-Jiun in Seoul. We have a lot coming up today, so let's get started with the day's highlights. We're seeing mixed reactions from central banks around the world shortly after the Fed Reserve's rate hike. Some have followed suit, while others have left things unchanged. What's happening in global business news this week? The Fed has pushed forward with its rate hike, but how are things looking in the ECB's world of negative rates? Also, a budding partnership. Facebook starts a new joint venture with Uber. These stories and more coming right up. But first, Korea's producer prices tumbled to their lowest level in nearly 6 years last month, largely due to cheap oil prices. The Bank of Korea says its producer price index dropped to 99.31 in November, down 0.3% from the previous month. In October, the index fell below the benchmark 100 for the first time since April 2010. The November tally marks the fifth consecutive monthly decline and a 4.6% drop from the same month last year. The drop was largely attributed to sliding oil prices, with the price of coal and petroleum products plunging almost 30% on year last month. Global oil prices took another tumble on Thursday, with the benchmark Brent crude falling to an 11-year low. Brent crude settled at $37.19 a barrel, finishing less than $1 above its 2004 low. The U.S. Federal Reserve's landmark decision to increase short-term interest rates is considered a game-changer in a world of abnormal monetary policies. And our Shin Se-min reports on how central banks around the world reacted to this latest move.
With its rate liftoff, the U.S. Federal Reserve has opened the floodgates for a shift in the world economy. Following a rally in global stocks, central banks elsewhere followed suit with rate hikes, starting with the Gulf nations. 4 of the 3 Gulf Arab states, Saudi Arabia, Kuwait, and Bahrain, reacted within half an hour of the Fed's announcement, raising a 0.25 percentage point, matching the Fed's move. The United Arab Emirates, too, climbed on board the rate ride upwards. The immediate response came from the tendency of oil-pumping states to shadow movements within the U.S. as their currencies are pegged to the greenback. In Asia, Hong Kong, which has its currency also pegged to the dollar, also lifted its base rate by 25 basis points, putting it at 0.75%. On the other hand, Indonesia and the Philippines both kept rates steady. Ahead of the Fed's decision, Korea froze its benchmark rate at a record low of 1.5% for 6 straight months.
Korea should not be rushed into changing its course of economic policy despite varying monetary policies around the world. But it sure has to monitor further movements like the Fed's future gradual rate hike and the indirect impacts stemming from the liftoff on emerging markets.
Experts add that although Korea's current low base rate is considered sufficiently accommodative, the Bank of Korea may be forced to reverse gears sometime mid-next year, depending on the pace of rate adjustment from the U.S. Shin Se-min, Business Daily.
The Korean government has, for the first time in history, authorized the establishment of a foreign for-profit hospital in the country. The Ministry of Health and Welfare said it approved an application from Chinese real estate developer Greenland Group to build a hospital on the self-governing island of Jeju. It also added that the facility will act as an important testbed as it expects more for-profit applications in the country's free economic zones to follow in the near future. While the government is seeking to attract greater investment in the healthcare industry, civic groups have been protesting this move, saying it will eventually increase healthcare costs and render health insurance useless. Now, Korean hospitals as of now require nonprofit status in order to receive the green light for establishment. K-pop, Korean TV shows, and dramas are some of the things that Korea is well known for in and out of Asia. But now Korean snacks are looking to find their way onto supermarket shelves around the world as a growing number of overseas consumers are falling in love with local delights. And our Lee-Seun tells us more about the latest K-snack craze.
K-pop music and cosmetics are some of the Korean products you may already be familiar with. But have you tried Korean snacks? Consumers around the world gobbled up nearly $170 million worth of these potato chips. That's a record high for a Korean snack food. The manufacturer, Orion Confectionery, is the leading exporter in the industry, with overseas sales of almost $1 billion during the first 3 quarters of this year. Most of it sold in the biggest market, China.
Orion has made achievements in foreign markets like China, Vietnam, and Russia through localized marketing strategies. For instance, our snack products like 오감자 and 고래밥 were launched in flavors that don't exist in Korea, like tomato, steak, and seafood, in order to cater to the consumer taste there.
Even the runner-up Lotte Confectionery had sales of more than $760 million last year, a 3-fold jump from 2010. Exports took up 30% of the manufacturer's total revenue, up 16 percentage points from 5 years ago. Recording over $1.4 billion of revenue during the first 3 quarters of 2015, Korea's snack food industry has risen as the Korean wave's next big trend. 이수은, Business Daily.
The Muslim community is growing here in the country, and rising with it is demand for halal-certified food, or products that follow Islamic dietary guidelines. And our Lee Joo-young has more on how domestic food companies have set out to grab a bigger piece of this market with an added Korean twist.
비빔밥, 불고기, 삼겹살, and 떡볶이. These are some typical Korean dishes most loved by both locals and tourists. But in order to also cater to the 35,000 burgeoning Muslim community here in Korea and the 1.6 billion around the world, more Korean food companies are moving to get their products halal certified or approved under Islamic dietary guidelines.
Muslims must strictly adhere to acts allowed by Allah, like worshipping 5 times a day and eating halal-certified food.
Since 2011, some of Korea's biggest food companies have strived to get their products validated under Islamic law. For instance, 제일제당 won 46 halal certifications on its instant rice, kimchi, and laver products, mainly exported to countries with high Muslim populations like Malaysia and Singapore. Another food producer, Daesang, also has about 19 certifications now under its belt. Along with this movement from companies to break into the halal food market, what has added steam is a memorandum of understanding signed by President Park Geun-hye with the United Arab Emirates this past March. Seoul's Ministry of Agriculture, Food and Rural Affairs has also set goals to reach the $1.5 billion mark in halal exports by 2017. But despite the extensive market potential, progress has been slow. The government says outbound shipments of halal-certified products only went up 0.8% since last year, reaching a mere $431,000. Experts say companies still need to conduct thorough research to grasp a better understanding of the $1.5 trillion market and further boost brand awareness of Korean products in promising regions. Lee Joo-young, Business Daily.
It's Friday, and that means it's time to look through some of the global business stories that made headlines this week. And for that, our Eunice Kim joins us in the studio today. Hello, Eunice.
Hello, June.
All right, so after nearly a decade, the U.S. Central Bank finally pulled the trigger. It raised its interest rates by 0.25%, correct?
That's right.
All right, so we're seeing several emerging economies actually following suit in a bid to keep investor funds from fleeing. But then over in Europe, I hear it's a very different situation over there.
Yeah, you're absolutely right. If the U.S. Fed went a little bit to the right this week, then European banks are going to the left of that 0 point, quite literally. Now, this is not a case that is taught in your standard economics class, so we're going to rewind a little bit today and zone in on Europe's negative interest rate experiment. Take a look.
Economics 101. When the economy is down, central banks cut interest rates to compel money stashed away in savings accounts to flow again and pump up the tired economy. But what happens when policymakers are very close to 0%? Can they go negative? Economists thought no.
but it's increasingly becoming a reality in central banks of Europe. Case in point, the European Central Bank on the 3rd of this month announced it would push its deposit rate 10 basis points deeper into negative territory to minus 0.3%. This means when the bloc's commercial banks store their excess cash with the ECB, not only do they not receive any interest, they have to pay the central bank interest of 0.3% of their deposit.
Today's decisions also reinforce the momentum of the euro area's economic recovery and strengthen its resilience against recent global economic shocks.
By penalizing banks, the idea is to stimulate lending and inject more cash into the market. It was a bizarre strategy the ECB first introduced in the summer of 2014. Coming before the Eurozone's quantitative easing program, it was a desperate move tried only 4 years after Europe's economy took a tailspin. Nobody knew how it would pan out, and there are strange things happening. In Denmark, starting in February, one private commercial bank began applying the same principle to its retail customers. For a deposit of $1,000, $5 would be chipped off as storage fee. On the other hand, floating rate mortgages are handing home loan holders a bit of money, rather than requiring them to pay interest. And over in Switzerland, where the deposit rate has also been left at negative 0.75%, the country in April began issuing 10-year government bonds with a negative yield for the first time.
And the experiment continues. I mean, it really does sound like a strange situation.
Right.
I mean, if you have to pay the bank to hold your money, then wouldn't people just opt to keep it in cash instead?
Well, that's a good question, and that was a real fear ahead of the ECB actually acting on this negative policy experiment. Would people start buying up safes and hiding their cash under the mattress like the old days, which would, of course, have the opposite intended effect? One thing to note here is that most commercial banks so far are opting not to pass on the cost to their customers, instead shouldering it themselves. And deposits in the Eurozone banks have been consistently growing even after the negative rate policy was rolled in. Between June of 2014 and October of this year, total deposits had grown by 327 billion euros.
Then I guess the question is it working?
Well, the jury is still out. That is the general answer here. Private sector lending by banks has risen marginally, though. The ECB said it rose by 0.6% in October on year after only expanding by 0.1% 1 month earlier. The Eurozone's inflation target of just under 2% is still far out of reach, though it did surprise by improving a percentage point in November to 0.2%. This policy of negative interest rates certainly has its detractors, though, some who say this can never be a long-term solution as it distorts financial markets and norms. And still others say it's a way for the 19-nation bloc to devalue its currency to make its exports more competitive.
Definitely some things to keep our eyes on the new year.
Absolutely.
All right, we'll leave that there for now. What are some other developments around the world?
Well, June, Argentina has cut off the reins on its currency, the peso, in a bid to draw more foreign investment and boost exports for Latin America's third largest economy. The peso was allowed to free float starting Thursday local time, and its value plunged by nearly a third against the greenback at one point, in line with what Argentinian officials had anticipated. The move comes just days after the country swore in a new leader, free market stalwart President Mauricio Macri, who promised to restore investor trust, ending an era of heavy state intervention. Argentina has also been racked with sky-high inflation of 25%. Now next, an update over north to Brazil, where Fitch has become the second ratings agency to downgrade the country's sovereign credit rating, BB+ with a negative outlook, or junk status. Analysts estimate an outflow of as much as $1.6 billion is on its way. And finally, over in the realm of tech, a new partnership between Facebook and Uber. The rideshare service is being built into the Facebook Messenger chat app so that users can book an Uber car mid-chat with a friend, for example, without having to switch apps. The feature is in testing stage and currently only available in a limited number of U.S. cities. Facebook says it hopes to add other transportation options down the line. The move is in line with getting the Messenger app to become a one-stop shop for a roster of tasks, including sending money to friends and making restaurant reservations. Uber, which is offering a $20 credit with a rollout, is valued at more than $50 billion. And Ji-yoon, that is more than the market cap of eBay and PayPal.
Wow. I mean, with Kakao Taxi kind of dominating the Korean market, I wonder if this is something we're going to see in the future down the line.
We are seeing these tech companies kind of seep into all aspects of our lives, aren't we?
Yes. Thank you so much for coming in today, Eunice.
You bet. Have a great weekend.
You too. And that wraps it up for today and this week. Thanks so much for watching, and we'll be back next week with more business news that matters to you. Have a wonderful weekend, everyone.